Good evening, all. Ira Epstein with your futures market wrap-up, and this wrap-up is for Monday. And we are on the first day of spring, March 20th, 2023, and literally about 5:02 p.m. Central Time. I'm putting this out early as I have a big birthday party I have to go to for one of my friends. So got to get this all done early tonight, and I'll be out of here in about 30 minutes. So a bounce day because Credit Suisse was taken over by UBS. We're still seeing problems in FRC, which is First Republic in America. Stock lost 47% of its value. This was a $120, $140 stock. It's down to $12. If it goes to the lower Bollinger Band, it would be $1.50. I'm not saying it's going there, but it's not looking good. We have the two-day FOMC meeting beginning right now, tomorrow. It will culminate on Wednesday with the announcement. I happen to think the Fed chair is going to go with a 25 basis point hike. I think he will sound dovish in the talk that he gives. He will be asked lots of bank questions. The volatility is going to be insane. It doesn't end with him, though. Then we go to the Swiss National Bank and the Bank of England this week. You have your hands full with these central bankers. Was today more than a dead cat bounce? What was it? Was it the beginning of something new? That's going to be the question. A lot of traders already, I see it, they're saying, that's it, the Fed is over and done. Well, if they're over and done, then they can't meet their mandate. And their mandate is inflation control is one of them. They have the full employment. But what about the inflation? So I assume that what people are saying is because of the banking situation and the tightening that's going to happen in lending standards, that is a given, that everything will slow down and that'll help inflation slow down. Maybe. I've seen it, that can take a long time. And what does the Fed do if the inflation is sitting up here at these levels? What does it do for the labor market? Is it that weak? Interestingly, I went out with two of my close friends yesterday morning for breakfast, and these were people that couldn't hire people. And suddenly they're hiring everybody they want, which is a good sign that things have loosened up. They're not offering less, they're offering their current pay, and they're able to find people. That's a big shift from just 6 weeks ago when they still couldn't hire the people. So that's good. But where are these people coming from becomes the question. What kind of skill levels do they have? So on and so forth. And don't forget, it is spring. The outdoor means that they're going to hire a lot more people, be it restaurants, bars, parks, swimming pools, you name it. Everything to do with America coming out of winter into spring and then summer is going to come alive. That is typically not a weak time for hiring, is it? I don't think so. So keep your eye on that. All right. So if we take a look at the S&P 500, we had a rally. The reason I'm not excited is all you did is you came back to the 18-week moving average of closes. We had talked that if you get under it and you get a bounce, that's often where you go to. If you had a rally, you did that, and then you went through it and stayed up a little bit, and then you bounced for the support. Well, here you came to it, you held it, then you got through it, and now you're back here. Now take out that high over there, might be of interest. But if you start down from here again, you open the door up for all this. That's what I think. Not saying we're going there. I'm telling you what you open the door for. When we take a look at a bar chart, we see that the pattern is one of higher lows and higher highs. That most certainly is the definition of an uptrend. Now, let's filter it by putting on moving averages. You're under the 18-week, you're under the 200, and you're under the 100-day. So this has been a bear market rally back into resistance. And if the market's looking for a technical point to fail, this is it. If it shoots through it to the upside and the way back down, in theory, that would be your support. But right now, that's not what it's done. It's come from the depths of HELL all the way back up finally into this resistance area. And what supported the market when going back and looking at it, when it's going on, I know what I'm saying here. I'm telling you, hey, I think the pros are covering shorts. You realize how hard that is? Because generally at a Bollinger Band is where the average person is the most bullish or the most bearish. Do you disagree with me? I mean, just think about where the market's at that point. And if it's not with an embedded reading, you have to do certain things. So here you didn't have the embedded reading. That's the cover zone. right here, the first time you hit it. You'll say, what about back here? Absolutely. But then you got into this area where you got back, and it's like a pinball machine. When you hit the 18-day average, think of the word reset. Even you younger people, there's electronic ones. I play them, so I know. I used to be great on the standalone ones because the art was banging it enough to not tilt it. You'd have to hit the reset. Well, reset puts everything back into play. And that's exactly what happens here. So when you hit that, the game starts afresh. That's the way to look at it, and that's what I see. Now, before I go into the NASDAQ and some of the others, I have one favor to ask you. What helps us get viewership is you either like or dislike these videos. If you like them, and I pray that you're watching them because you like them, would you give us a thumbs up? Cost you nothing, helps us, all right? You'd be smart to subscribe as well. Why? Every time I put out the video, you instantly know that it's there, right? That way you're not waiting for emails and other things to show up. That's the way that I'd go if I were you. Two things. Subscription on YouTube's free. Okay. Lower low, higher high. You know what I'm going to say? You're overbought. You're in an upper band. I know the market was going crazy, but my work says that's where the pros are coming out of positions. In the micro mini Dow Jones, well, you've got a market that still gets down to the Bollinger Band and bounces away. It's oversold, not embedded. That's what the market should be doing each time. Resistance back at the 18-day average is most certainly not a buy. It's got to close over the 18-day average and prove that it can then have higher lows, higher highs. So if we do this together and just dissect this part of the chart, the high here is 32,577. Now watch. The high here is 32,553. So what we've done with this change, when we got up over there, the market's high enough now where the arrows shouldn't be pointing down. They should be pointing to the upside as long as that didn't take out that. And if it didn't, then you've got your arrows pointing up. Are we there? Let's go back and take a look. Remember, this is the day that you care about right here. So on the swing line, I'll come back over this way for you. Yeah. And the low of this day was 31,640. That's very important. We already know we got the higher high. 31,656 and up. So now my arrows will be, and I should have done that for you, higher lows, higher high, a bear market rally that could go up to the 18-day average of closes. Don't know how I missed it, but I did it. I didn't catch some of these arrows either. This one's still bearish. Lower highs, lower lows. Are we embedded? Well, you're flirting with losing it. Now, I can tell you that I had put out a sell signal for today in the market, and once the market took out the lows first, I pulled it for all my traders, and then the market came rallying back. So do I want to sell it now on a rally? No, because the odds are that if it rallies any further, you're going to lose the embedded reading, and if you lose it, then you've lost that downside momentum, and if it gets lost, the odds favor you're going back up to these moving averages at that point. So no, I want to yank my order there. In the T-bond market, higher lows, higher highs into the resistance right here and overbought. I'll let somebody else want to own that going into this Fed meeting. Same in the 5-year notes. In the dollar index, we have a higher high and now a lower low. It's not set up for any type of trade at all. In the euro, we have a higher high, lower low, not set up for anything. This is to be expected. The markets are just getting over 2 weeks of shock and awe. And now they've got this bank meetings, 3 of them coming at you. What are the bankers going to say? I don't think the event is the 25 basis point hike. I think it's what the Fed chair is going to say. If he's truly going to stay data dependent, he has to state that, but he can also say the Fed is concerned about the banking. Will he say that? I doubt it. He wants to make it sound as though the banking system is very strong and everything's fine. It's a rough one to walk. I guarantee you it's not an easy one. It's been one of the roughest meetings he's had. Bitcoin, this is the safe haven play, like gold. Market keeps coming up, but you don't buy over Bollinger Bands. If I'm going to chase this now, I want to see an embedded reading and a pullback under that band. I don't want to come in there. Brent versus WTI, you're still showing weakness. The spreads are narrowing in between the two. And look at how you've fallen out of bed. So now, as the markets come down here, Goldman Sachs, who hasn't made a right energy call that I can recall, I would say 6 months, 9 months. All right. I think Jeff Curry's been off on the calls. I think he's a great analyst. I don't think he has it here. And I still see the weakness. Now, if all this banking issue multiplies, do you think there's going to be that demand for the energy? I realize people want to call a bottom in the market. I hear it over and over. You probably got to take some supply off the market in order to accomplish that. And Joe, you know who I'm talking about. Joe, you are getting chances galore. I want to pick up a newspaper and find out that you have instructed your staff and they are aggressively replenishing our strategic reserves. There is no such thing, Joe, as you bought it too high. They're called reserves and strategic for a reason. Got it? And you've done great. You got out of the market here, got us back our oil. In gasoline, don't get bearish on this product. That's what I'm telling my clients. I understand this. Once you get back over 250, 265, whenever that occurs, if this is the pattern, you will end up on the current one, higher lows, higher highs, and the battle will start here. When you clear that next time, I think your spring-summer rally is underway. So timing is going to be everything. And in nat gas, again, another failure at the 18-day average, right down to the Bollinger Band, but you're very oversold. There could be some short covering in here. There's no horizon here to get long. So if you're thinking, oh, it's so cheap, I got to own it, enjoy yourself. Cheap could be $1.50. I don't know what the number is, but I know that at this point in time that the demand for this is going to be more for stockpiling than usage. We're at March 20th already. So if you want to keep up with what I do and all the free offers in my newsletter and the letter from Linn, move your cursor up here, give it a click when you see the icon, and sign up. Could it be easier? I'm Ira Epstein. Please, the thumbs up. You take care.